range, which maxes out at 405 miles of range. Hyatt hotel chain, H is the ticker, down 1% on an offering of 7 million shares. Walt Disney DIS got pounded yesterday, down 4% on what Credit Suisse called an overreaction to comments from CEO Bob Chapek regarding lower than expected Q4 subscriber growth for Disney Plus. Lastly, Adobe, ADBE, they reported earnings yesterday. Nice sound beat, but the sales growth, 22%, was a slight deceleration. Earnings growth was the slowest rate in at least 8 quarters. That stock looks like it's headed down 4% in the early going. FedEx, FDX also down after hours on higher costs. EPS were down 10%. Despite revenue rising 14%. And Stitch Fix, SFIX, fashion retail company, up 16%, earnings per share 19 cents, turns around a big net loss from a year ago, 44 cents. And the stock is seeing nice acceleration in the top line, up 29% in the past quarter. However, 6 relative strength rating, very, very deep base, so not at any buy point. All right, a little bit extra time there, but send it back to you, Allie.
Appreciate it, Dave. Now let's turn our attention to Thinkorswim from TD Ameritrade. We have the NASDAQ composite here with candlesticks. Chris, your take on the action yesterday?
Well, it was maybe just a tish above the prior high, but essentially an inside day. It was also the way it closed and the early post-market action, it took out the low of the day within a few minutes, and so that didn't look good. But it held above the prior day's low, so that's really our major line in the sand now. And now the question is, okay, is it going to get pinned here under the 50-day, or can it break above it? And I'm just kind of sitting and waiting until we see where the direction of the market is going.
Yes, a key level to watch there. I'm going to go ahead and launch an early poll while we continue our discussion. So going along with the theme of our song this morning, what's your level of concern with the market at this juncture? So Arusha, I want to go to you and walk us through how you've handled your portfolio this week and your level of concern and your level of exposure, if any.
And I nearly try to talk with the mic muted.
But you caught it yourself.
I think that is already a good Tuesday if I did that.
Except it's Wednesday, but that's fine.
Oh, oh my God. Okay, it's a bad Wednesday. Yeah. Okay, so I came in already. I lightened up at the end of last week. So I wasn't like I didn't have like a huge amount of exposure. I was probably like 50% in. So I lightened up a little bit more on Monday, just for those stocks that weren't acting well. But so that's how I've handled it. But a lot of times when I start lightening up and really try to start closing some of these positions, that's usually the low in this market. So even though on the NASDAQ, that was a pretty good break. That was a character change. I don't want to necessarily assume that we're going to be taking a lot of time off, right? If we get through the Fed talk, and also on the market tomorrow is happy with whatever they said, or they just met expectations, or they didn't increase, or increase a tapering, or whatever whatever would really cause for concern. This market, by the end of the week, you could have all these weekly charts look like great support weeks. So I'm trying to keep an open mind. I have raised a bunch of cash, so now it's more like, okay, how do I get back in? And I might have to just start getting back in pretty quickly if all of a sudden those weekly charts are gonna actually look decent by the end on Friday, right? So I don't want, and I haven't been good at these other pullbacks too. So that's kind of what's just going through my mind. It's how do I get back into some of these? So that's why I'm looking like at some of these larger cap stocks, like, okay, maybe at least I'll get some exposure on these slow moving stocks so I can have some, so I'm not completely caught flat-footed. If this is we might have had our correction on Monday, right? You know, before the corrections would take 2 months, they pack them all into one day, maybe. So that's the thing. So I'm trying to think of the other side, because my initial kind of reaction and kind of the experience that I gained over the first 10 years is, when you see hits like this, you're going to probably be down for at least a few weeks, and it could be longer than that, because that's a pretty big hit below the 50-day.
Mm-hmm. And so talk a little bit about the mindset of staying flexible, because as you said, on the one hand, if you feel like you're close to a sell signal with a trade, but you don't want to be selling right at the bottom, how do you balance that with following the rules?
Well, yeah. Now, if you're down 8%, right there, that's where there's no room for negotiation. Right. So you have your plan, you trade your plan, right? So those things, you don't say, oh, I'm going to try to hold because I'm going to sell at the bottom. You can't. You just got to be very, very careful of that. A lot of times you will, but then you just get back in. If you're above that, if the stocks are above the 50-day moving average, and and they're just coming in hard and they've been really scary over the last couple of days, you can lighten up, but you don't necessarily have to close the positions, right? Because you haven't hit your stops just yet. And so you can just manage that position instead of completely getting out of it. So that's kind of the one thing that I've been trying to tell myself, because it is really hard to get that kind of fear emotion. You're trying to not lose any more money. It's very easy to start selling things overboard, just throwing everything overboard when you just get in that kind of hitting the sell button. So that's one thing. Now, the other thing is, the mindset is you kind of have to look at these kind of hits. There are tons of other investors out there. These kind of hits, they're looking at it as opportunities, right? And many times they are opportunities, as long as these stocks are still trending well. Now, so that's what I'm trying to tell myself when I'm going through some of these charts is, okay, this could be an opportunity to get in one stock that, and Chipotle is one of those examples where it's like, it hasn't come anywhere close to the 50-day. The best stocks will only come back to key support areas when the markets are scary and you're losing money, right? And so you're losing money, you don't want to buy another stock, and here comes one of the best stocks in the market. I don't know, I'm not saying Chipotle is, but a lot of times the best leading stocks, they'll only come back when the markets are scary and you're losing money. But a lot of times the last thing you want to do during those times is not buy any more stocks because you've lost a lot of money, right? So it's this kind of dichotomy. So that mindset of, okay, yes, I got hit. The overall market has taken some good damage. You definitely want to be more cautious, but you don't necessarily have to get completely out of the stocks that are acting well. And this could be an opportunity to get in some of the stocks that you missed a couple of months ago that really took off.
Okay, thank you, Arusha. I'm going to end the poll and share the results with the audience. Dave, it looks like almost half of our audience is somewhat concerned with the market conditions, a quarter very concerned at this time, a little over 20% mildly concerned, and 7% out there, some 80 respondents are not concerned. What is your take on this reaction?
Looks very logical to me.